help with tax, don't know what to do. The Brysons are here for you. We know every tip and trick. It's serious tax talk with a Louisiana twist.
Hello and welcome back to another installment of Talkin Tax. I'm your host, Ryan Ruff. We appreciate you being with us for today's episode. Look, we've got the stars of our show, Mr. Carie Bryson, Miss Angie Bryson of the Bryson Law Firm. They'll be joining us momentarily. But look, we want to thank you again for finding your way back to the show. You know what we do here on the show. It's tax talk with a Louisiana twist. And today we've got a great topic lined up for you today. We all think it's so easy or it's so obvious to stay current with our filings as well as our payments to the IRS on a, maybe it's a monthly, maybe it's a yearly basis, however you or your business take care of that. But there can be some consequences that add up on the backside of it if you're not staying current. But luckily, you have some options when it comes to this. And luckily, we've got Carie and Angie to shed some light on this for us today. So let's go ahead and bring them on and get the conversation rolling. Carie and Angie, how are you doing this morning? Good to see you.
Great, thanks. Good to see you.
Doing well.
Yeah. Well, great to have you guys back on. Looking forward to today's episode. And so the topic of today's episode is really compliance issues. And that is what our viewers, what you, our audience, needs to know about the importance behind being current on your filings and your payments when working towards a resolution with the IRS. So, as I mentioned there at the top, guys, this seems obvious, right? But some circumstances can fall upon people that can inhibit their ability to stay current. So could I have you start really just by giving me a high level overview on why it's truly important to just be current with your filings and payments and to not honestly slip behind?
Okay. Being everyone, I say generally everyone knows that they have to file a tax return every year if there's enough income earned in that particular year, and the IRS expects you to file. You have the obligation to file. They put the onus on the taxpayer to file a return, and it's general course of business, universal. If you earn income, you've got to file a return, and it's a self-reporting system. So every income source you have needs to go on that return, and that's pretty self-explanatory.
I'll add, from our perspective, from the resolution world.
Oh well, yeah.
From our perspective, it's out the box. If you're not current and compliant, you're not getting a deal. You're not resolving your case. The first question when we call the IRS, the first thing they're looking at: are they current? Are they compliant? If they're not current, okay, and current means the current year taxes being paid. Okay, compliant in the IRS world means they filed all their tax returns. Now, there's a look-back period, depending on the type of return we're talking about. But for the general 1040 tax return, let's say the look-back period is 6 years. So they're going to look back and see if they filed for the immediate last 6 years. And if they are, they consider compliant, meaning I could then go to the next step of resolution. But if they're not current and compliant, that's a problem because you're not going to get a deal. You can't get an installment agreement. You can't do the things that we can do unless they're current and compliant. So, anybody coming to our office, they all from day one are going to hear, we got to get current and compliant. We got to make the tax problem an old problem. I can fix it, but I can't fix ongoing problems.
Right. And that leads me to my next question, guys. What are honestly the downsides? What are all the different variables that come into play when you start being late and you're not current and compliant? What does that look like for those that fall into that realm?
The biggest one is you expose yourself to potential criminal prosecution. It's 1 year for every unfiled tax period, every unfiled year. So that's the biggest risk. And as lawyers, we tell every single client that is a risk. Practically speaking, the IRS is not probably going to chase, and from experience, not going to chase everybody down to put them in jail for unfiled tax returns, although it is a risk. The biggest thing is you generate penalties and interest accruals. So failure to file penalties, if you file late, and then if you have a payment that's due, it's late payment penalties if you don't pay when you actually file the return. Those are the the biggest
You know,
risks
and it's
as far as
and
I,
it's- and they both can be assessed simultaneously at the same time.
Yeah, for
So
sure.
it can get out of hand quick. You know, it's often, I mean, it's very often that usually by the time some of the clients get to us, their penalties and their interest are as much as their original tax liability. So it's almost,
wow.
yeah,
because the IRS is not a good creditor.
No.
You do not want to use
super creditor,
There's much
right?
better ways
Yeah.
to do that than use the IRS. And people do that. They'll think, oh, I'm just going to not pay. They won't collect now. But man, when they go to pay, the penalties and interest have accumulated so much that it becomes a problem.
Yeah, and that was actually going to be my next question was what does it look like in terms of are they able to stack up? And it sounds like, yes, they certainly can. Is there an example of a situation maybe that you guys had handled where it's stacked up, maybe even beyond what you had just mentioned, Carie, to the point where, it was even more so than their initial tax liability? Anything like that?
No, because they do cap. So it can never probably work. But they each cap. So it's not, but the interest and the penalty, it's usually, by the time we're resolving a case, it's usually a good 50-60% of the original tax liability, has increased that much just due to the interest and penalties.
Sure.
I think that, what people don't factor in, I think most people know that that there are penalties out there and interest. The compounding effect is the interest on the penalties. So you're paying interest on the tax bill and then interest on the penalties that accrue. So it's just this constant down spiral of penalty over penalty on interest on interest.
Yeah.
It's compounding effect.
And I mean, just to answer your question about an example, I mean, there's a lot of examples of it.
Every case basically.
Yeah. But I'll tell you I'll tell you a little trick that I think is very sneaky what the IRS does. And people are amazed that they do this. We see it in almost every case, in a payroll case. But the IRS, so when a taxpayer usually has a problem, let's say they missed a payment, they get a little bit of money, so they just want to send in money. Well, they think they're sending in, money to a certain tax liability, but they don't mark it. So when they do that, the IRS will take the money, and apply it to a different tax period than what they're intending, because they're going to apply it in the best way for the IRS.
Sure.
Meaning, because the penalties, when you first start out the box, if what you missed a payment, it goes 15%, then it drops and drops, and the penalty gets lower to where it's down to 5% after a certain period of time. So when you make that payment, the IRS will pay that to create a new 15% penalty on the current one, and you think you're paying this. So you got to be careful how it's applied. It's very sneaky. It's something that we see, and it's easy for us to catch. And once you, for lack of a better word, call the IRS out on it, we'll fix that. But
you got us.
to do that, you got us,
Sure.
But no one wants to do that, and the level of proof required to show that is it's a long spreadsheet that you got to show this, because it's especially payroll tax, because the payments are so often, you got to show this payment, this payment. So it's a very tedious process, but something worth doing, because you end up saving a client a lot of money
potentially. Yes.
I think how many quarters they are. So it's just things like that happen. I mean, that's every day for us. So.
Well, it's interesting that you mentioned, in order to prove that to the IRS, because that's something we've kind of talked about in past episodes, is just the importance of keeping your ducks in a row when it comes to documentation and just making sure you've got records of everything. So that way, when push comes to shove and you step into the ring, you've got the ability to fight with authority. Now, that being said, in terms of the word fighting, when it comes to some of your clients or just anyone really that is faced with this kind of circumstance where those penalties are stacking up, it's starting to look bad. Is it tough for most people without help to be able to get out from under that, given, especially, Carie, the situation you just mentioned where the IRS is trying to kind of play the game a little bit? Is it tough for somebody to do it on their own? And do you see instances where people are able to do it on their own, or do they really need to have somebody step in the ring for them, like the Brysons?
I mean, what I find when people try to do it themselves is that they lack the necessary proof. It's a burden of proof issue, really. There are, one of the main reasons you can get a penalty abated is to have reasonable cause, but you have to prove that you had a reasonable cause. And a lot of people just don't understand what it takes to present to the IRS to substantiate a reasonable cause claim. They'll just write a letter saying, I was sick in the hospital for 15 days without having, without having the necessary medical records to prove they were in the hospital for the 15 days. So it's things like that we find all the time. So penalties are available. Interest is not. Now, interest is a whole different thing. I mean, we've been doing this a long time, and I've never had interest abated. The only way to get interest abated is to prove the IRS did something wrong to cause the delay, to increase the amount of interest. Very hard to do. I don't recommend trying it. Usually it never works. So, but penalties, we do get those abated, but
Sure.
they take a long time. You have to have a lot of patience and a lot of stamina, because it's going to take a long time, and you got to have the necessary proof.
Well, guys, I was doing a little homework this morning before connecting with you guys, just looking through the website, and I saw between 2016 and 2020, your company has abated over $58 million worth of cash for your clients. So clearly you guys live and breathe this stuff. You've been successful in this regard to working through penalty abatements. Walk me through what this process would look like for somebody that, came to see you guys, maybe it's their first time walking through the front door. They're having the conversation with you. Walk me through what this process looks like and how you guys go about handling their situation and going through penalty abatements.
The process is pretty cut and dry. It's just really what Carie said, a persistence and proof. So those are the two big things. So you basically request abatement of the penalties, and then I would say over 90% of the time our first request gets denied. It's sort of a rubber stamp, and that's why persistence is key.
Mm-hmm.
From that, you have appeal rights, and we will perfect the appeal for our clients you have there's a deadline. So you have to do this timely. And if you don't, it's basically it's a moot point after that.
Mm-hmm.
So we file the appeal. That takes typically the whole process, to get to that point takes about maybe 18 months or so. It's longer now because the IRS is so backlogged.
Mm-hmm.
So it gets assigned to an appeals officer, and you have a hearing essentially, and you've got to plead your case with all of your documents and proof. And typically, we get pretty good results on appeal. I would say 60 to 70% of the time we get something abated. So we're pretty good at that part of our business. I mean, and we've got some really good success stories there.
Yeah, I'd add to that too, kind of coming in the front door. When you said that, it's rare. Well, not rare, but I mean, it's a more holistic approach, meaning somebody comes in, they have a tax problem. Mm-hmm. They don't know penalties, interest, and tax. I have a tax problem. I haven't filed in 10 years, or I haven't done this, or I got something happened in my life, some situation happened, and I got behind.
Sure.
So when they come in, they meet with a lawyer. All our consultations are free. The first initial consultation, because I mean, frankly, there are some people who come in and it is a quite simple matter, and I can fix that, or I can tell them how to fix the problem, and they can go do what they need to go do. And I've done it. We do it all the time. Look, you don't need a lawyer. That's what you need to do. Just go do this. It'll work.
Right.
And, we get letters all the time. Thank you. That worked so well. I can't do that. But I mean, but some people do need a lawyer, and those that do, they would go through a consultation, and most of them, most of our clients don't even, realize what avenues are available to them, what they need, what do they do. I can do a penalty abatement. But the ones that have filed a penalty abatement before, usually they bring in that denial, and I'll say, well, let me see what you presented. And I know exactly, as soon as I read it, I'm like, yeah, I could see, then we have to, refile or beef it up and do some, provide the necessary proof, usually take the appeal, maybe file the appeal form, take it over, and kind of just redo it from the beginning.
I mean, it's second nature to us as attorneys to introduce evidence of our allegations. So it's pretty typical for someone to come in and say, "Hey, I was sick for a year. I was taking care of a mother, a father, a wife, a husband." And so we would introduce medical records to prove that person was sick. And typically, people just introduce their allegations with a letter, but we have the allegation plus the fact, the evidence to prove it. So it's no longer an allegation; it's a fact.
Yeah.
Yeah.
You've made me think about an interesting variable that I'm sure is thrown your way, guys, in your dealings with clients. What happens when you're faced with this circumstance where a client comes in the door and they're looking for your help to, with, abating a penalty or just getting tax resolution as a whole, but they don't have the documentation or they haven't even thought about the documentation that might be needed to go through this process? I'm sure you've been faced with a situation like this. What's that process look like? Because I would imagine it's a little more difficult to navigate, but how does that go about if somebody doesn't have their documentation, in order, like we always preach on this show?
That's a forensic exercise. We're so good now. And it's really the biggest. I see it every single day with our clients, and I know Carie does too. So when someone gets behind for whatever reason, the obstacle is always or typically that I don't know where to start, and so getting off center is the biggest step. Once you decide to make a choice to be proactive and go look for things and get help. We offer so many avenues to assist. So if your records are destroyed in a hurricane or a flood or a fire or your CPA lost them or whatever scenario you could think of, there is a solution. We would go look for your bank statements. We would get copies of any receipts. You can go to a vendor if you're a business and say, what did I spend with you last year or the year before, the year before, the year before that? The IRS, when they audit you, they have lots of ways to gather information to prepare returns for you if you don't file. So we think, well, how would the IRS do this? What would be acceptable to the IRS? And we've done this for hundreds of clients who haven't filed returns because they can't find the information or they don't feel like they can get a good enough close enough is good enough. Typically, if you're forthright and then you do it in good faith, you can make some really good progress and get something filed to make a way forward, really.
And on the income side too,
yes.
What people don't realize, your income,
True.
I mean, they don't, it's kind of second nature to us, but as you know, everybody gets a W-2, everybody gets a 1099, depending on what they are. Well, there's multiple copies of that document. You get a W-2, but there's also a copy of that W-2 going to the government. So the government, people don't realize this, but when you file the return, the tax return, the government has all the income side. So the first thing they're doing is matching that income. So that's how they know you didn't report all your income. Usually it's because you have income reported they look at your return, the numbers don't match. It's an easy audit for them. So, the first place to start on the income side is let's get your wage and income transcripts from the government. And let's see what you really had, what was reported to them. And that's a good start on the income side. Now, expenses, unfortunately, are not reported to the government. And that's what Angie was talking about.
Yeah.
We've got to go, it's basically, we've been through so many audits now, we know exactly what they're going to do.
Exactly.
So we just kind of reproduce it, and we're getting ready, just auditing the client pretty much in a way. Go talk to your vendors, get your bank statements. Let's see. Get your receipts. Let's go back and recreate basically the file year, and then you can usually get close enough to get a good return file.
Guys, it sounds like you have countless years of experience doing this dance with the IRS to the tune of what I saw on the website, which is when all was said and done in terms of accepted offers and compromise, penalties abated. We've got audit reconsiderations. And then the last one was the collection of expiration date money. Over $113 million for your clients that you guys have been able to get back from that 2016 to 2020 window. I can only imagine what those numbers are going to look like after the COVID-19 pandemic and that's impact on so many people on so many levels. That being said, guys, when you look at that number, I guess more so, today we're talking about, the idea of just staying current with your filings and your payments. So basically, this sounds like a lot of the penalty abatement work really that you guys do. Of that $58.5 million that you guys have helped in the last 4+ years, what does that is there a particular story that jumps out at you? One client of yours or an example of this work that really is memorable because of the impact that you made on somebody's life and the hole that you helped maybe dig them out of?
So many.
I know.
For me, it's I don't know. For me, it's not even the largest dollar.
Right.
It's like if you ask me, what's the largest dollar money you've saved? I probably don't even really know, but I remember those cases, where the clients, I've settled cases. They owe 10,000, but you settle them for $50 or $100 or whatever, and you really have to do. The work is the same, and that's what a lot of people don't realize. The work that we do is the same whether you owe 10,000, 100,000. Usually, a lot of times, the work, it's the same issues and the same thing. It's just just less zeros, really.
Sure.
And I mean, I guess the point is it's just really. It doesn't matter about the amount of the money. It's more the clients. I mean, just the appreciation that you get. You affect somebody's life. I mean, and it doesn't matter. It's all relative, I guess, is what the point I'm trying to make.
Well, I mean, there's so many stories. We had one client, particularly this poor guy. I mean, he had a child that was missing. He was running a business. This is in if I recall, a 3-year time span. So his child went missing. His business office flooded, and then shortly thereafter, his house burned down.
Oh my Lord!
It was a mess, and so he had personal income tax issues, and he had business issues, and all of that stemmed from the tragedy in his life. So we were able to finally get his returns filed because he was typical record situation. I don't have anything to file. I am really at a loss where to start. But he was on the road to recovery. We coached him through that. It really was a forensic exercise, frankly. And then we got him into an installment agreement for some of his business taxes, and we were dealing with a revenue officer, a local IRS person. And through all of it, we got his personal income tax penalties abated, obviously, because, I mean, come on, have a little empathy for the guy and his family. I mean, I don't think he ever found his son, so that was really a long-term tragedy for him. And then on the business side, we were able to get most of his payroll tax penalties abated, and those are pretty hefty. Yeah, I mean, that's a dramatic example, but
remember the case with the guy we had we could talk about cases all day.
Oh yeah, all day long.
But one that really got me, that got me going, and I was so fired up about. We had a veteran one time. He was a war hero.
Oh,
and he actually was in a wheelchair due to the war, and he had made a mistake in his filings a while back, and really was just on disability. Is all we're talking about. So we're not talking about
very little income. Yeah,
very little. And the guy had he had very little money, very little income, and the IRS was levying his disability payments that he was getting from and I couldn't believe it. And the guy had no money to. So I mean, of course, I took the case. I'm like, you served my country. I'm going to take this case.
Yeah, we did that one pro bono.
And it took a long time. And this poor guy, it was a really long time. The IRS, the fact that this guy was a war veteran, a hero served our country, lost his limbs meant absolutely nothing to the IRS, which just infuriated me to no end. But anyway.
I still have his letter.
Yeah, I still have his letter for my wall.
Yeah.
Because it just meant so much to me personally to get that done.
Yeah, that's really interesting, guys, and it makes me bring up the point of taking a step aside from really our topic of conversation today and staying current, with your payments and filings. I want to kind of ask a more personal question to you guys. In that, is that really the most rewarding part of your job? I'm sure you look at those numbers, on the website, and it makes you feel good. But at the end of the day, knowing that you have a real impact on somebody's human life, and taking a massive burden off of their shoulders. I mean, how does that feel internally for you guys, as you go through this on a regular basis?
Wonderful. I mean, it's also humbling oftentimes. And I mean, every single day we speak with people who I think they feel hopeless most of the time. And so I always try to end every conversation with our clients with giving them the next step and that it's doable, but it's the most rewarding part of what we do. I mean, what we do is not easy. I will admit that it's a fight every day. So you've got to be ready. To get up every morning and basically go to mental warfare with the IRS, but it's worth it. I wouldn't trade it for anything. And I'm grateful to be able to have the opportunity to practice law in a field where I do get to touch people's lives that way. Yeah, it's wonderful.
I was gonna say anything to add to that, Carie?
I mean, it would be all the same, but yes, it's absolutely wonderful, and we are, we are human as a business, and we do get caught up sometimes in running a business, and we always get humbled or are reminded, it seems I'll get, running, and next thing I'll get a note or I'll get an email or I'll get something from somebody, just tell, and it's always good to go back and remember, this is really why we do what we do.
Right. It's easy to get lost in the shuffle sometimes, regardless of what field of work you're in. And
it's unfortunate because we do, and I'm sure some clients, that we've had, didn't necessarily feel that, but man, it really, we do, Angie and I do take it, we take it personally. It's our business. It's like another child to us, really. I mean, we've been doing this for so long, and it's a part of our life. I mean, I don't really know now what we would do without it, but it's part of us, really. Mm-hmm. This is who we are and what we do, and it's good. It's good. Like this conversation today with you is really good because it's reminding me. I haven't thought about
Yeah.
my friend, my war veteran friend in a long time, and it's good to make me think about that again.
yeah, no, absolutely. And I can only imagine, obviously on future episodes, we're probably going to be tapping into other cases, doing the case talk thing and recounting some of those awesome memories for you guys. But look, to kind of bring our show to a head here, the topic of the show was just making sure that you're staying current on your filings and your payments. Any last words to bottom line it for anybody that's watching or listening today, really, and why it's so advantageous to stay current?
I think that the biggest takeaway should be do something. Don't let your fear of not having the perfect solution stop you from getting the monkey off your back. You don't have to live with looking behind your shoulder. There is a solution and a way forward. That's the biggest takeaway I would hope that anybody who listens today would grab. Yeah.
Yeah, and I would just what I said initially, anyone can fix an old problem. But
Yeah.
We can't fix an ongoing problem. So you've got to stop the bleeding. You've got to stop it. So if anybody out there, today's your day. Let's fix it. Start filing. Let's start paying. Just pay this current year. Don't worry about all what you owe, even if it's millions. Don't worry about that. We can fix an old problem. Just stop it today. And that's really the first step. Stop it. Let's start fresh. From now on, you file, you pay what you owe this year and going on, and then we can fix the old problem.
Alrighty. Well, hey guys, thank you so much for your time taking it today with me to walk through this topic. And hey, look, I'm already excited for the next one and what we're going to dive into in that.
Thanks.
We're looking forward to it.
Yeah.
All right, look, and we want to thank you, our audience, for joining us for another great episode today. If you liked what you saw, you liked what you heard, feel free to comment, subscribe to this show, share this information with friends and family, whether it be the show itself or through social media. Obviously, we'd love to get your feedback on the show. Any topics that you would like us to hit in future episodes, feel free to reach out. We'd love to have you, our audience, be a part of the show as well. So for Carie and Angie Bryson, I'm Ryan Ruff saying so long, and we thank you so much for joining us on today's episode of Talkin Tax.